But as you look at your renewal, a lot of times it's like, hey, we'll get this to you, a month before the renewal date. That rarely happens. It's actually getting drawn out later now, so you're probably seeing that 2 weeks to a week out from the renewal, which is creates stress. Those who have a well-run organization, those who have the risk mitigation, they tout that as your of a differentiator. And then also, the things that you may have been getting credit for in the past, your fleet telematics, your fleet tracking, those are kind of the bare minimum now. If you're not doing those things, it's more of a detriment than a positive. The general rule is frequency breeds severity. So if you have more frequent claims, it's going to drive your costs up. Your general liability is really where you have some, not wiggle room, but you can negotiate and utilize the different language. If you're just offering your certificate of insurance, they all look the same. Like, I can't tell the difference between one or the other about the actual coverage.
Welcome everybody to the next episode of the Mobilization Mindset. My name is Scott Pieper. I'm CEO and founder of Mobilization Funding, and today we're going to be talking all things insurance. Yes, it's that topic that no one really loves, but yet you have to deal with all the time. So I have a great expert. You guys may recognize him from previous episodes, webinars, or other things, but Dylan Burns is a partner at the Baldwin Group. They do more than $1 billion a year. They are a public company. From 2019 till now, 140 offices nationwide. And the reason I have him on is he's gone and grown up through the business. He didn't start there at the biggest firm and he's grown with them, but he's also worked specifically in the construction space for almost 10, 12 years now. And he's seen and done a lot, and I've seen it with him from the very beginning. And so he's going to share some great stories. And today you're going to learn all about the things that you need to know in insurance, not the noise, but the things that are going to be most important to you. Dylan, welcome.
Thanks, Scott. And yeah, Scott was very influential to me through my growth, getting into the business and staying in the business, as we talked about before. But yeah, it's been a good ride. And when you're first starting out in any industry, so specifically in the insurance industry, you get a lot of no's. And Scott was really helpful in saying, hey, just stick to the path, and you blink, and 10, 12 years later, I get to sit with you here and talk some things that I think that will be beneficial for your clients and prospects and partners.
Yeah, I think it's funny because everybody wants to quit. I mean, that's at some point in life, you always want to quit because shit gets hard and it's hard and it's hard. But whether you're in a job, whether you're running a business, whether you're in a position you don't want to be in, or you think about leaving the company, you always have that taste and is it the right time? When is it? But when it comes time to quit insurance carriers or quit your insurance broker, what are the things right now that are just hot and trending in the insurance industry that, if you're running your business every day, it's the last thing you want to deal with. You hope the renewal comes and you pray you have enough coverage. You want to sign it, move on.
Yeah. Maybe
you task someone on your team to look into things, but at the end of the day, a lot of the folks that are listening to this now probably just sign the insurance, make sure they have it, it meets the requirements of their job, and they move on.
Yep.
But what's happening underneath the surface that everyone needs to be paying attention to right now?
Yeah, so like anything, and there's a lot of parts to cover there, but as you look at your renewal, a lot of times it's like, hey, we'll get this to you, a month before the renewal date. That rarely happens. It's actually getting drawn out later now, so you're probably seeing that 2 weeks to a week out from the renewal, which is creates stress. It's a big nut to cover, and you're hoping that the same coverages that you've had over the number of years are going to remain in place. As we have seen the market kind of harden and soften, it's cyclical like anything else. You have carriers come in and out of the business or in the industry segments that your clients might be in, but also they may not be aware of some of the coverage that would be taken away or provided back. Costs are going to be cyclical. I know we've talked about this in the past, but if you have a fleet, your auto and your excess liability are going to be impacted. And a lot of times you're seeing, single digits increases on the general liability, auto maybe a little bit more than that, and your excess you're going to see, 20, 25 plus, depending on the industry segment and obviously your losses. But
and this is nationwide too, regardless of geography.
Correct. Yeah, it's nationwide. I would say, our neck of the woods in Florida, it's a little bit more drastic. So that's a lot of my experience, when talking some of these rates. Now, if you're in a less litigious state, maybe a little bit less, but it's going to be, again, directly impacted by geography, some, but your industry segment, your loss history, and just your operations that you have.
So if there's two things that someone can focus on when they're going through that renewal, like you're the owner, the leader of the business, and you're trying to, what are the two things right now to get your head around if you can only pick two?
Yeah, it's don't be afraid of the process. The process in most instances is going to start 3-4 months out from the renewal. I would say from the risk management strategy standpoint, it needs to be more of a focused year round. And if you're just thinking insurance, again, we're thinking renewal a lot of times, but it's more of a three-legged stool. Your placement, which is your renewal, your insurance renewal there. You have your risk mitigation. What are you doing to mitigate losses or things that impact your business? And really closing out or your claims advocacy, I think, are your three legs of the stool. So claims advocacy, risk mitigation, and placement. If you're just thinking about it as placement, or your insurance comes up once a year, you're kind of forgetting the other two. So making sure your safety folks, your mitigation teams, and working with your broker to provide items that could benefit your company throughout the year is really important. And that's a year-long process. And it's whether that's toolbox talks monthly, or whether that's working 6 months out from your renewal, which is my recommendation, not 4 months, but 6 months, so that other carriers that may not have the ability to work with that company, they have that those renewals, or they have those submissions in place, and you get those carriers and underwriters comfortable on an earlier standpoint.
Is there someone on take a construction company, for example, or a manufacturing company, but is there someone, I think, a certain role inside that company that if you're the owner and you're not taking it on, that it's best to task them with, that you find has a good view of it all?
Yeah, the guy who pulls the short end, the short straw. No, I'm kidding. It's a lot of times it's going to fall towards, if you are a large enough organization, you have a risk manager. A lot of those are there, but it working together with your risk manager, your C-suite, your CFO. CEO is going to be the one looking at the dollars and cents of the operations, but whoever that may be, my suggestion would not just be like, hey, you put it on an island and just say, go run with it, and then you bring it up once a year. It needs to be part of that conversation because it's such a large line item for any business, really.
All right, so let's go to the fuel of all companies, which is top line revenue, new business. What is a great way to utilize your insurance, your insurance program, your insurance broker, the relationships around insurance to actually help you get more business?
Yeah. If you're looking at it as just a negative, and most will, it's insurance.
Yeah, and that's why I asked. Most people look at it like it's just a cost center, a necessary evil, but
yeah,
I know, talking to you before, the best of the best companies find ways to generate revenue from not only the relationship, but also by strategies they use within their insurance program.
They tout it. And those who have a well-run organization, those who have the risk mitigation, they tout that as your of a differentiator. You can be the least expensive or the cheapest, or you can use that and say, hey, yes, our costs are this. Here's what our cost to you is going to be, but here's our track record. Here's our loss history. Here's what we may have started 5 years ago with maybe some a worse loss ratio, but here's where we've gotten to, and it's a much better position. And here's what we've done, and here's why we would be more of a profitable partner for you, and not an anchor dragging you down because you didn't have the right coverage, and the GCs getting brought into suits that shouldn't be on them. And then also, the things that you may have been getting credit for in the past, your fleet telematics, your fleet tracking, those are kind of the bare minimum now. If you're not doing those things, it's more of a detriment than a positive. And I think focus on that. And again, it's an additional cost. It's additional tracking, but it drives good culture for your business. It reduces those claims, and by reducing the claims, it makes your insurance costs come down, and reduces the amount needed to bid for your contracts.
So let's talk about claims. You mentioned that. Okay, so now you build your insurance program, you're using it in the best possible ways you can. Now you have an accident. whether it's in your fleet, whether it's on a job site, and you're trying to make that decision. Every business owner does, well, like, should I put the claim in and then I get dropped, or should I put the claim in but my rates are going to go way up? Like, what is the decision tree when you're actually faced with that situation and you're trying to decide, do I put a claim in with my insurance or not?
Yeah, that would be, again, in that team, that core group internally with that company or who that entity may be. It may not get all the way to the owner, or it may. I mean, depending on the loss, it definitely may impact it. But that decision, I think, is best made within the team, but also working with your insurance broker. Like, we can help you get to that point where it's that break-even cost, where we anticipate where that may be. The general rule is frequency breeds severity. So if you have more frequent claims, it's going to drive your costs up. Now, if you have one severe loss or a shock loss, carriers are not going to look as punitive towards those as they would if you have 10, 15 claims or a year, or if you have a bunch of windshield claims. Maybe we pay those, under the table. We may not submit those to a carrier, but really understanding what that break-even point is, because yes, you could make the decision to say, we're going to pay this out of pocket, and maybe not submit it to the carrier. But if it's a kind of a nasty claim, or one that, working with your broker to say, there is some things that this could come up later on where we don't think this is going to go away, you may want to bring them in, because then you get the defense counsel from the carrier working on it. And if you were to file that later, so say 6 months down the road, it didn't go away. Well, now the carrier goes, this happened 6 months ago. Why am I just finding out this now? Now they've got a little eyebrow raise. Now it's going to impact how the claims process goes and how your renewal is going to be impacted.
So let's think about where you think about your complete insurance coverage on a business, right? Whether it's general liability and auto and umbrella and so forth, cybersecurity, all that. Where do you see businesses overinsured, and where do you see businesses under or not enough insurance?
From the insurance sales guy, you can never buy enough, especially depending, on the geography, just the litigiousness of our society nowadays. If you have the ability to procure that coverage, I would say go ahead, based on the cost, obviously. But as you look at probably one of the ways, again, auto, you're always going to want to have those $1 million combined single limit. And if you can increase those, to $2 million, it's going to reduce the need to get higher excess liability or umbrella limits. That would be one place to be looking at. Workers' comp, it's statutorily, the limits and the rates are there, and the coverage is being provided. Your general liability is really where you have some, not wiggle room, but you can negotiate and utilize the different language. Now, a lot of those languages are going to be pushed on by the contract, whether that's additional insured or waiver of subrogation, those type of things. But really understanding what that looks like, and understanding what the exposure basis is. Some carriers can base them off of revenue, some can base them off of payroll, really depending on even in their general liability sense, what's going to be the best product for you. And then you work with the different carriers, whether that's your admitted space going in the excess and surplus line space, your Lloyd's of London's, or if you grow large enough, is there a way to take on more risk, potentially? Looking at a large deductible, looking at a group captive that may be a better fit for you, which those are starting, I'd say $250,000, $300,000 in premium or more, which is again a lot of insurance, but a lot of insurance premium. But once you get into it, you're almost, a lot of them are pretty close. So that would be mostly for your general liability, workers' comp, and auto liability.
So behind the scenes in pricing from insurance carriers, how does the business work? Like when like I've talked to so many of our clients and others, they said, I just don't understand why this insurance is so much. Like it's so costly. Like who's making the money? They'll ask me a question, and they don't know. Sometimes I don't think they, myself included, understand who actually is collecting the money, who's getting paid the money, who gets what, and of the premium. You know? And
that's a great question, and that's the $1 million question for anybody. It's like, hey, why don't we start an insurance company? Like, why don't, there's a lot of state filings, a lot of different things that are initial costs that are, prohibitive for many. But when you're looking at who's getting paid for it, when you pay your premium, most of the clients we're talking with are on a more so a guaranteed cost. You pay your premium, you have a claim, the carrier's going to pay those claims up to the limits provided. Typically over the last few years, a lot of carriers are running at a higher combined loss ratio, meaning for every dollar that they take in, they're paying out more. So you're at a dollar, 101%, 102%. You can get these from what the carriers are, what they state, and that's really impactful because if they're like, why my insurance going up? It's like, well, every dollar that we're taking in, we're paying out $1.05, $1.10. They're not profitable. But where that means is you have, your 40 to 50% of the premium. A lot of times goes to your operating costs, reinsurance costs, payroll, their insurance, all the things that any other business would handle. And that's a big cost of it. And then the additional is, your claims or others' claims. And so when you say, we only have a 40 to, or a 60% loss ratio, well, you're not profitable for that carrier, like to any carrier really, because they're saying for every dollar we're taking in and all of our overhead, we're paying out, 10, 20% more. You're going to have to increase those costs or increase those rates.
Yeah, or they'll drop you.
And you got to find somebody else. And that becomes the point of looking at, are we taking less coverage? Are we going away with, larger deductibles here? For your HVAC contractors, your plumbers, are you taking larger fire deductibles, larger water deductibles? You may be taking those already, and you may not even know it because you may be not reading through the policy, but you may already be having those deductibles. You may be taking a larger one, or a carrier may say, we'll do this for a lower cost if we take this larger deductible. And those are some of the ways.
So this is interesting. So like when I'm talking about like picking your accountant for the construction space, right? I always say like not every accountant is the same for every business or industry. And in my opinion, in construction, if you pick the wrong account that has no construction industry just because they're a CPA, you will suffer a lot of different things that you otherwise wouldn't need to suffer. Reporting, information, tax, a ton. Is that the same in the insurance industry?
I would say 1,000%. I mean, whether that's your attorney, your CPA, your insurance broker, I mean, we like to kind of tee ourselves up in that same sense, but it makes a huge difference. Whether it's having the negotiation power with those carriers, how many premium dollars are they placing with the carriers that that are a fit for your business?
That matters.
It's like anything. If you place more premium, you're gonna a lot of times get a better cost, or you have a track record of providing profitable business to those carriers. But it's also the policy forms. When it gets down to it, you pay your insurance premiums because you want to make sure your claims are paid, and there's not these nagging exclusions or exclusionary wordings within your policy. I'd say for any insurance policy, I'm sure all your clients have read through all their insurance policies.
Yeah,
probably not.
Never.
Yeah, I'd say the first 5% of the policy, which is about 200 to 300 pages, is where they give in your coverage. They're saying, hey, we're covered for this, this, and this. It's that 95%, 90% of the policy. It's like, well, except when this, or excluded when this. And so that's really working with your broker, with the right broker, to make sure that, if there are those exclusionary wordings, you're aware of it. You're not just going down and hoping that it's covered. General liability, everything's covered. Yeah, except when the exclusions, or having the buying power to negotiate those exclusions out. And I think that's when I look at the three-legged stool, that placement side, it's working with the appropriate broker to make sure you're getting the wording needed for your business versus, hey, cheaper. I got you the lowest price, but here's, hopefully you don't have a claim because you may not be covered.
So in reviewing all the policies you have over the decade or more, what are the most common mistakes you see contractors making?
I think right there, it's when we get our marketing summary, when we have, the 12 carriers that are looking at your business this year for a submission or looking at to quote it, maybe 6 of them come back and say, hey, we're going to decline. We've had loss in this space. We're not going to be really competitive. And 4 come back and say, hey, here's a quote, but you're going to have, exclusions, but they may be the least expensive. And then you have 2 that are kind of fitting what you're looking for, coverage and cost, and working with that broker to negotiate the best, because they're underwriters are people too. Like they want to win, and depending on the type of time of year too, they may be up to goals. They may need to hit some different things. So that's another negotiation tactic as well. But when you're looking at this, it's really identifying what that marrying the cost and coverage, and picking the least expensive every time is typically not always the right move.
And do you find that that's oftentimes the most common mistake made?
I would say so, because it's at the end of the day, it's a cost. The bottom line is always going to be impacted through your insurance. It's usually one of the larger line items of any business. But picking the least expensive and we're not going through the proposal and working with your broker, and that may just be the broker you're working with. Maybe not showing all the exclusionary wording and the endorsements that are being provided. If you don't know what those are, you're not going to have an educated process. But working with somebody who knows that and is going to share that with you throughout the process and letting you know where you're at is going to be really helpful.
So when you're working with your general contracting clients, right?
Mm-hmm.
They have a different and type of set of insurances they need, and listening to them and working with them as they talk through what they want in their subcontractors. Mm-hmm. Aside from what they actually put in the contract, right? I mean, of course they want what's in their subcontract agreement from insurance requirements. But when they're talking to you, just you to them, and they're talking about the type of subcontractors they want to pick and how it relates to the insurances that come around, any insight you can offer to the subcontractor community there that are like good takeaways that they probably just won't hear or won't want to ask the general contractor, but you provide?
Yeah, I mean, I think when you look at your subcontractor language, you want to make sure your coverage meets those. Now, there are things that, hey, we carry as a GC $15 million of excess liability. So we want you, subcontractor, to carry $15 million of excess liability. That's a negotiation point. You can negotiate that down in many instances, down depending on the GC. They may say, hey, this is our hard and fast line. We don't play around with this. That could be one way. But also, I think it's not just the cost. Like, you're just talking cost. You're all kind of working on the same playing field. It's touting, hey, here are the endorsements we have that are being included. If you're just offering your certificate of insurance, they all look the same. Like, I can't tell the difference between one or the other about the actual coverages. You got general liability, you have workers' comp, you have auto liability, here are your limits. But there's actual language in there. Do you have a residential exclusion? Are you working with in a residential environment? You'd be shocked at how many times I find a residential exclusion with a sub who 90% of their business is residential, and maybe they just haven't had the claims yet, because if they did have a claim, that's denied, and maybe 90% of your business is uncovered, which is insane. But the other things is if you are having those telematics, if you do have a mod that's stellar, let's tout that, because that's going to differentiate you from somebody with a 1.1 mod or a 1 mod. If you have an 82 mod, 0.82, it's showing that you have a culture of safety, which is going to be more beneficial for any GC that you're working with.
Right, and I think you should point those things out, because
of course,
if someone's trying to sit there on how you're going to win the bid, and you're like, they have a 0.82 mod, and maybe they weren't thinking that. So what does 0.82 mean?
Yeah.
Okay, well, now the project manager's looking at that. They understand what that means. What about when they meet the next 2 or 3 people and they say, what's your mod? Mm-hmm. And that competitor of yours says, I don't know. Or they say it's 1.2.
Yeah.
They're gonna know that there's a 40% chance of increase, right?
That 1.2 and that 1.2, or just the I don't know, that means it's not top of mind, or it's not that important to them. There are ways that you can help mitigate how your mod is going to be impacted through how claims are paid and those type of things. But at the end of the day, it's all about their safety culture. Right. And for any GC working with subs, I mean, if you have those who are just going to be driving claims up for any job, that's not a good partner. And again, if it's not top of mind or it's not important, you may want to find a better partner to be going into business with.
Agreed. All right, so here's the tough question. How does someone decide on which broker to use, who to choose, when to fire someone? Why should I give somebody else a chance?
Yeah.
And you've talked about already the mindset of going through the review process, someone providing value. But if someone's still just maybe they're holding on to their friend that they've had for a long time. Maybe they're just not ready to commit to someone new. But what are the questions they should be asking, and how should they go about choosing their broker?
If you're looking at, again, the one leg of the stool, hey, my broker, my buddy, my fraternity brother from, college, he brings my quote and it's fine, it's good. There's a better way to go about it. You got to really look at the capabilities that your broker's providing, their buying power with the carrier, their what you're getting throughout the year versus, hey, hey buddy, can you go ahead and give me your revenue, give me your payroll for this upcoming year, what you project. We'll get the quotes through, and we'll get you, over a couple beers, 2 weeks before, and here's your quote. You probably have the wrong partner, and probably not somebody who's the best fit for you. Working with and understanding what that stewardship plan is throughout the year, whether you're meeting quarterly or biannually, going over losses, how are claims being closed out? What are we doing to mitigate when we had a shock loss? Are we implementing telematics into our business, or is that not even coming up with your broker, and how that may impact them? If you're not looking at alternative risk solutions, if you're in that kind of growing space where a guaranteed cost program has been what you've been doing all the whole time, but there may be a better solution, a larger deductible, a group captive that is just a better fit for your business, but you don't know what, you're not the insurance professional. You may not even know what that is. If you're not having those conversations, it's probably time to, look outside. And it's not just, hey, what I used to do. I call you on a Tuesday, can we set up a meeting for Thursday? And then, hopefully we get the business there. It's really interviewing and finding the best partner, and just not the guy who calls you on a whim when you didn't get the certificate of insurance on the right amount of time. And a lot of times I think it's a timing issue when you're looking at brokers is, oh yeah, this guy called me just on the perfect timing, or they call my office manager the perfect time. Yeah. There's a better, more strategic way to go about it.
So you mentioned captives, and that's a hot topic. You hear that brought up at conferences, meetings, and I think secretly some people understand them, and then a lot of people also are just like, captive, question mark, what does that mean? Is it for me? If you're going to give everybody here that like Cliff Notes version of what a captive is, and is it right for them, and what should they be thinking, what would it be?
Yeah, so it's kind of your crawl, walk, run. You're crawling, you're starting out, you're in that guaranteed cost program where, again, you pay your premium, the claims get paid. As you look into the large deductible and group captive, you're retaining some risk, and that's all insurance is at the end of the day. Either you're passing your risk to another entity, another party for premium, or you're passing some of it over, you're retaining some of that, whether large deductible or a group captive, and your costs are a lot of times, but your premium costs are coming down, but then you have the potential for you're going to be sharing that risk. And in a large deductible, you're basically working directly with a carrier. You're taking, $100,000, $250,000, the first claim, to offset some of your costs. And for many clients who may not have the loss history or may have a pop here and there, that may be a great fit. But a group captive is a little bit different, where you're actually joining other best in class companies that are in a similar or just slightly different businesses of like yours, and they're sharing amongst the risk, meaning that they are taking, your premium is going to come down, your rates are going to come down in a lot of sense, but you're also paying for the first 125 of any claim, and then the balance of others will be shared amongst the members. They're not going to let in just any Joe Schmo without a good safety plan in, because they don't want to be sharing in that risk with not a great partner. So when you're looking at that, you're probably looking, 200 maybe on the low end to 250 and 300,000 in premium. Now that's a big hurdle for a lot, but also it's identifying, if we don't have a safety plan in place now, you're not going to be a good partner for them. So implementing that now and building that, you're typically looking 3 to 4 years of minimal experience. Typically it's 5 to 8 before they're a good partner. Because again, you need to show where our historical losses have been to make sure you're going to be an equitable partner for that group captive.
Who puts those captives together too? You have to find your own, or is there captives out there that people can?
Yeah, there's captive management companies. We have one internally with us as well. And you can also look at a single parent captive where you're basically starting your own insurance company. That's a little bit different, but the group captives, or the captives most hear about, are group captives, and that can be anywhere from 10 to 15 members. Now, again, those premium are much, much higher, kind of the threshold, or getting into 100 to 150 members, where again that's a bigger spread of risk, and it's going to be a less of a threshold of premium dollars to get into. But yeah, they have there's a number of groups that we work with that put these on, and again, it's working with your broker, because in the group captive sense, that premium that you get from your guaranteed cost is basically baking in all the operating cost, all the overhead, all the reinsurance costs. You don't see that. In a group captive, those things are all broken out. The transparency is really nice, because you can see our operating costs are 26%. Well, that's a lot lower than it would be in your traditional guaranteed cost program.
I love it.
Yeah.
Well, the podcast is called The Mobilization Mindset. So from a mindset perspective, if you could leave the audience with one thing today that they would just shift their mindset to, that could benefit them across their insurance programs, what they're going to do next in the insurance world, what would that be?
The suggestion there would be to shift your focus, shift your mindset from just looking at insurance as a cost. How do you use it as a tool to benefit your company and your partners, and not just look at it as something that you got to deal with once a year? It really should be a year-round item that's being a focus internally. But if you're not working with a partner who's a broker or another insurance partner that doesn't have those same goals, or isn't providing you the capabilities or different structures surrounding your team, be an extension of your team, then you have the wrong partner as well. And it might be that time to start looking at better fits for your company, because if you're not growing, you're dying. Same thing happens with your insurance. If you're status quo each and every year, there's a lot better ways to structure it. And if you're not looking at those, you're a detriment to your own business.
Yeah, I agree. I think also with that too is you got to shift your mindset to getting on offense, like you said. If you have a low mod, tout it. If you have a great plan, tout it. If you change your insurance plan from one to the next, regardless, tout it. If your safety record's there, tout it. Because if you don't, no one else is going to care. And I think where it'll show up is when you tout it, you're now leading your potential client or client to questions they may want to ask your competitors that won't be something they want to tout. And that's only going to benefit you. And I think those 2 points are an excellent place to start thinking about insurance. Because it certainly beats, oh my gosh, I got to pay this insurance premium again, because that sucks.
Yeah, no, that's no fun. And it's no fun at all. And yeah, that shift is imperative to the business, and it can only benefit you.
Well, Dylan, I appreciate you coming in, man. And always great to have you in here live. I know you shared some great insights. Where can people find you? If they want to talk to Dylan, how do they find you? How do they speak to you?
Yeah, always, at LinkedIn. I'm sure we can get our contact information on here as well, but our company is the Baldwin Group, and Baldwin.com. It's a great avenue for you, and happy to chat anytime you'd like. Any of your partners want to just talk through insurance. Again, everybody's favorite topic, but again, always here and appreciate the opportunity.
Yeah, and Dylan's a great resource too. Even if you have questions today that have nothing to do with your desire to shift brokers, I know Dylan and his team are always willing to share insights. Even I know Dylan's even helped people prepare questions for their own meeting with their own broker, and that didn't lead to any business to him. Maybe not yet, but it would certainly help them for the meeting. So welcome, man. I appreciate you. Thank you very much.
You're welcome. Appreciate it.
Well, everybody, that is a wrap on our episode this week. Until next time, please follow us and give us a share on LinkedIn, both Dylan and I. Also, you can find us at mobilizationfunding.com. You'll see this episode air also on our YouTube channel, which is Mobilization Funding, and of course, wherever you're listening to us now. I welcome you and thank you. And until next time, God bless you and have a great week.